Welcome back. This is the Big Story segment on BDTV, your trusted platform for breaking down the key issues shaping our economy, industry, and nation. I am Bethel Olujobi. In the Big Story segment today, we will look at the bank recapitalization policy and examine the implications for the banking sector and how far the banks have gone in their bid to meet the deadline set by the CBN. The bank recapitalization policy announced in 2024 by the Central Bank of Nigeria has seen many Nigerian banks embarking on aggressive fundraising through IPO or private placements. To dig deeper into the discussion, we are joined by our guest analyst today, Ayokunle Olubumi, who is the head of financial institutions rated at Augusto & Co. He will help us understand the implications of the policy for the banking sector and how far the banks have gone in their bid to meet the deadline. You're welcome to the show, Mr. Olubumi.
Good morning.
Good morning.
Thank you for having me.
Thank you for joining us. So we'll get right into the discussion. Now, we understand that the banking sector's recapitalization has been driven by several critical factors, including the need to strengthen financial institutions to enhance competitiveness and mitigate some risks that we've seen in the system. Could you elaborate on the issues within the sector that necessitated the recapitalization?
If you look at the banking industry, the last time we had a recapitalization exercise was in 2004, 2005. And then the minimum capital, right, then 25 billion, was about $189 million, right, that the minimum that each bank should actually have. In today, you see the equivalent of that amount is almost equals to just $19 million. So that shows you that how devaluation has adversely impacted the capital base of the banks. Although they are growing it in Naira, you see that in dollar terms, the value of the capital has been eroded. It's so sad that you see that at the end of 2023, almost all the top banks have some of their obligor exceeding the single obligor limits. Right, because in terms of even their capital, it has actually been eroded. And to be fair, a lot of banks were actually even expecting the recapitalization exercise. At the same time, if we look at the ability of the banks to support the economy, it has also been adversely impacted by this low capital of the banking industry. For instance, if you look at the bank assets to GDP, for Nigeria, it has been low at about 16%, right? Compared to South Africa, where it's actually even 74%. In Brazil, is over 125%. In Kenya, is 48%. In Egypt, is 100%. And even in Indonesia, right, is actually even 43%. So although there are other aspects, there are other issues that actually affect and that affect the size of the industry's asset, but you agree with me that capital is also a critical aspect, right? And definitely it's obvious to all, even those in the industry, that the capital of the industry has been eroded in real terms, right, by the devaluation of the currency.
Well, very interesting. Now, with the new capital influx that we're seeing, the banking sector is expected to play a crucial role in driving economic growth. And we know that Nigeria is aiming at actualizing a $1 trillion economy by 2030. Now, with these new policy, do you believe that that vision of a $1 trillion economy is feasible post recapitalization? And what are some of the enablers that are required to make this ambition a reality?
Interesting question. I think if you look at Nigeria, if you look at the potentials that we have, if you look at our resources, both the natural resources, the human resources that we have, and even given that we hardly have if we have any natural disaster, it's actually few and far between. You agree with me that achieving a $1 trillion economy is something that is achievable, is something that is doable for Nigeria. However, we should note that recapitalization of the banking industry is not the magic one that will actually even achieve that. There are other things that needs to actually be in place to ensure that Nigeria is able to achieve this particular target. For example, the macros are not still looking good. We have inflation about over 30%. We have the exchange rates going up and down like a yo-yo, right? We have the insecurity issues all over the whole place. So all these need to be addressed if we are going to achieve this $1 trillion economy target. In addition, right, you also agree with me that, look, we need to also create an environment that is friendly to the private sector. Because it's the private sector and the businesses that are going to drive this economy. Government policies must be perceived to be business friendly, and even businesses should be able to understand and even be able to plan ahead. All this volatility and even these haphazard policies, this policy somersaults, right? All these we need to actually even reduce it to the BRS minimum to ensure that we're able to achieve this $1 trillion economy target.
Now, with the recapitalization exercise still on the way, how would you assess the progress so far? And what are the initial outcomes we're seeing? What are the banks doing to meet this target? Because this is a target that was set for March 31st, 2026. And the capitalization has begun. What are you seeing? How is the outlook so far?
If you look at in March 2024, when the policy was released, based on our assessment, about $4 trillion, 4 trillion naira, right, is actually even needed to recapitalize the industry. And so far, the industry has actually even raised about 2 trillion, right, half of that, and which is actually quite impressive, right? Although I agree that some of the funds that have been raised are still awaiting CBN's approval. In summary, I think the industry is actually even moving ahead. Almost all the banks, both the big banks, the small banks, the medium-sized banks, almost all of them are in line. Some of them are even ahead of their even recapitalization plan. So the industry is actually even working towards this target. And for now, although definitely we know that things can actually change fast, right? But now a lot of banks seems to be in line to actually even meet the minimum paid-up capital before the scheduled deadline on 31st of March 2026.
And yes, now that we have seen some banks make some moves like the IPO, offering IPOs, and the public offerings, the like Fidelity Bank that diversified, required a hybrid offer, right, to public and to stakeholders, and some other banks that have done one or two things to kind of raise capital, right? What are some of the significant improvements? Have we seen stability, liquidity? Have this improved the operational efficiency of the banks? Because we want to understand if we have started to see early results. Like, what are some of the trends that have emerged? And do you think there's an impact so far?
Okay, I think if you look at the stock market, you will see that the banking recapitalization is something that has actually even helped the stock market. The shares of the banks are actually even trading better. But talking about the industry specifically,
yes,
like I said earlier, a significant proportion of the capital raise are yet to be approved by the CBN, right? I think CBN approved the first batch, I think in just towards the end of last year, right? The end of 2024. Right. And we expect that by this year, we start seeing the impact. And we're already seeing the signals. For instance, the international banks have been quiet about the expansion plan. A lot of them are getting more bullish about it, right? So by the time we see the audited financial for 2024, right, we're going to see the impact of that. And for some of them, when we have to wait till the end of June 2025, we'll also see the impact of the capital. And
currently, there are about 21 banks, commercial banks operating in Nigeria right now. As it seems, if you take a larger look at it, some of the larger banks appear to have absorbed a substantial portion of the capital available. Now, do you think that the smaller banks will be able to meet these requirements?
Okay, so let me first correct an illusion, right? You have about 36 banks in Nigeria, right, including the 6 merchant banks and even the about 4 non-interest banks, about 36 in total. I think he's actually even a level playing field. And what we've seen so far is that even the so-called small banks, a lot of them are in line with their capital raising exercise. The only thing is that for the big banks, because of given the size of what they need to raise, you see that they are more vocal, they are more out there, right? Given the size of share of what they actually even need to raise. For instance, when the policy was announced, the top 5 banks, right, the Fugas, right, as we normally call them, the requirement, what they needed to raise about 1.5 trillion. If you had the 2 other banks to hit, right, among the top 10 banks, all of them in total need to raise about 2.2 trillion. That's even more than half of what the industry needs in total. So what you realize is that those actually need to raise a huge amount of money. They are actually more in the public phase. But some of these, so there are even some of these some of the small, really so-called small banks, right? Some of them don't even have up to raise up to 5 billion, right? So if such a bank, you agree with me that there's no need for them to make noise. And a lot of them are actually even quietly raising their capital. And even for them, the only impediment that would have been is that some of those banks not willing to expand their pool of shareholders, not willing to even diversify their shareholding, right? But what we've seen in their interaction with them, a lot of them are actually more willing to even say that, look, let's expand the pool of shareholders. And then we see some interesting things towards the end of the year. Some of them are even planning to come to the market to even do IPOs, right? So I think a lot of banks will actually even do the so-called small banks will meet the recapitalization target. However, having said that, I think for these relatively small banks, the challenge won't be now, it will be after raising the capital. Because, for instance, you have some of the big banks some of them having over 2 trillion of capital to actually even do business after the recapitalization exercise. And you have some banks that have less than 100 billion. You will notice that, look, the operating environment is going to be different. For instance, if you look at last year, right, you see some banks that actually within half a year have already made profit of 1 trillion. While we see some small banks that all through the year, they are even struggling to even make 10 billion. So what is going to happen is after the recapitalization exercise, the small banks will need to ask themselves, do I want to remain small or do I want to even partner or merge with the big bank, right? So actually even enjoy more profitability, something like that.
Interesting. And now this exercise has wide-ranging effect on stakeholders, consumers, and even some of the financial institutions in Nigeria, right? And of course, the overall economy, right? Now, I would ask you this, Ayokunle, how might consumers benefit from this robust banking sector that we're aiming for, right? What are the long-term effects on the ability to lend, the bank's ability to lend, and of course, how will this influence Nigeria's economic trajectory in both the short and the long term?
Interesting question. I think the capital raising exercise will be a watershed in the banking industry. And you realize, because you see that from next year, April, the concern of the banks won't be how to raise the capital. The concern will now be how to deliver return on those capital. Because it's something for you to raise the capital, then you need to actually even deliver returns to the shareholders. To be able to deliver returns to the shareholders, the banks will be compelled to deploy this capital. And what we will see, right, is that a lot of banks will start even thinking, what can we do? And we expect that most sectors will emerge, right? Because the bank will be thinking about what other sectors can they even lend to, about explain the traditional ones that they lend to. And what you also see is that banks will be de-risking some sectors, de-risking some customer groups, some customer groups that you will never think that banks will actually even lend to. Banks will be looking at it also. And I also believe that aside from even the loans and advances, the banks will be looking at more asset classes, right? Derivatives is going to play very key, be much more prominent in the banking industry post recapitalization. And we're going to see a very interesting thing, because if you look, let's cast our mind back. After the recapitalization exercise in 2005, you will see how that catalyzed the economy, how the banks were investing in various sectors to actually even prop the economy. We expect something similar to that post recapitalization.
I was coming to that, right? In 2005, the base capital was raised from 2 to 25 billion, right? And what can we learn from that? That's what I want to ask you right now.
Yeah,
from the effect, right? From the outcomes of that recapitalization exercise.
Yeah, I think there are some good lessons to be learned.
Yes.
Right. There are some good things, some things that we did right, and there are some things that we didn't actually even do right. For instance, we could see how important the banking industry is to even sustaining the economy. We could see that, right? Different new sectors were actually even emerged. But one major lesson, right, that we also need to also have at the back of our mind is that, look, for a bank, it's not only for you to have such huge capital, risk management needs to also be prioritized. So from the banking perspective, even from the CBN perspective, they need to actually up their game in terms of risk management. Even the CBN needs to up its game in terms of regulatory oversight. Because for most banks, like I said earlier, they will be under significant pressure to deliver returns for shareholders. And definitely the temptation to even go above the line, right? And even engage in some transaction that can actually even be above the risk tolerance threshold, right? The temptation is actually be there, right? So it's for the CBN to actually even come in line. And also the banks also need to strengthen their risk management framework. Because like I mentioned earlier, a lot of transactions will actually even be coming in. So the risk management team needs to be strengthened to be able to have the capability to be able to handle such transactions.
Interesting. And now we don't have much time anymore, but I have about 2 questions I would try to fuse into one. Right now, Ayokunle, on a personal note, right? I'm asking you now this on personal note. Do you think that all the banks would be able to meet this recapitalization goal? And also, how best do you think the challenge of the unbanked populace can be tackled, right? Because we know that Naira is relatively stable, right? Do you think this sustainability would continue, right? I don't know if you understand that question. Do you get me?
Okay. I think you have 3 questions in one.
Oh, yeah.
Right?
So okay,
first...
let me just say into one, right? Do you think that all banks can meet this goal, and how best do you think that the challenge of the unbanked populace can be tackled?
Okay, right. I think the first one is like you want me to actually look into a crystal ball, but the honest truth is that look, a lot of things can actually even go wrong. However, as at today, almost all the banks are actually in line with their capital raising plan. Having said that, a lot of things can actually even change. When it gets to raising capital, a month is a long period. And also note that, look, there might be mergers and acquisition of banks that have actually even met the recapitalization targets. Right, so we are saying how everything still look good and rosy now. A lot of things could actually even change within the next 14 months. Right, in terms of the bank, I think
Yes.
I think the focus now currently we've been focusing on the commercial banks trying to even get the unbank into the financial system, but I think it's a wrong strategy in my opinion, because you notice that this unbanked segment for the banks, the profit that they will gain from even going into this unbanked segment is actually very small. And that's why you see some banks are even closing down some of their branches or even trying to close some of their branches in the hinterland. I think rather the focus should be on using the microfinance banks, right? The payment service banks, and recently I've seen the fintechs, right, to be able to even bring those into the financial system. Although there are concerns about the financial health of the microfinance bank, right, but some of them are actually still very strong. And I think we should actually even focus on using them, because if you check, right, as a matter of fact, they actually set up to handle small size businesses, right, to even support small size businesses, and I think it's within their forte. And if you look at what the fintechs have done, they've actually done very well, because when you get some of the hinterlands, when you ask them, some of them that you don't even expect to have a bank account, when you mention some of the fintech banks, then some of them be saying, oh yes, I know them, I actually even have their accounts.
Yes.
Right, and the payment service banks also. Let's not forget that the payment service bank, the aim is to ensure that they go into the hinterland and be able to even help these people to even save and even do transfer. So I think that those can actually be avenues in which we can reach the unbanked and increase the number of Nigerians that are actually in the financial system.
Well, thank you very much, Olubumi, for your time this morning. It's been a great conversation with you. Ayokunle Olubumi is the head of Financial Institutions Ratings at Agusto & Co. Well, continue to stay connected with us as we continue to see the impact of the recapitalization policy and how it will benefit the financial sector and Nigeria's economy at large. We'll continue to update you on recent developments, but that's all we can take today on The Big Story. Stay updated as we bring you more on BDTV. I am Bethel Olujobi.